Barrick Mining, it formerly was Barrick Gold, ringing the opening bell today. It will trade now under the new ticker symbol, B. And the company was out with an earnings beat this week, getting a boost from higher gold and copper prices. Joining us now at Post 9 is Barrick Mining CEO Mark Bristow. Good to have you here, Mark. In honor of the new name, I'm going to start with copper instead of gold, because it's an interesting time. I mean, a lot of unsettling things potentially in the global economy, and yet copper's been kind of moving up and showing some strength. I'm curious as to what you're seeing and whether you're puzzled by it.
Yeah, I certainly am puzzled by it because, normally copper follows the global economy, and right now it's moving against the trend. And that's important because we've all been talking about tightness in the supply side and also a big demand coming. Everyone's been hesitant to bet with that because the economy's been iffy. And I think what's interesting is that we're starting to see that, and it couldn't be a better time for Barrick as we bring in new production. And we lead the industry in new build gold, copper production.
Right. So that tightening is obviously helpful.
Very helpful.
All right, let's talk gold as well. You said on the call, I believe, you've got, and I don't want to misquote you, but I'm reading a transcript, very little inventory left ahead of us, constantly buying assets. So for those who would think, well, it's just great, gold's going up, on the discovery and production side, sort of give us a sense as to what you're seeing when you say that about inventories.
I think if you look back to the turn of the century, the gold industry really hasn't replaced what it's mined through the drill bit. What it's done is unlocked lower quality gold deposits because the gold price has just kept rising. What we've done in Barrick, of course, is we've invested in our future, and what you see is a significant growth looking forward to the end of the decade. We are now guiding a 30% growth in our production of both metals. We call it gold equivalent ounces.
Well, how does the cost of that production shake out? I mean, are you having to go farther afield and spend more to get it out of the ground?
I think what we've seen is that there's a lot of harvesting going on because of exactly that. The higher gold price unlocks gold inventory that's in your resources, moves it to the reserves, and so that adds to production. But it doesn't build runway in the industry. And what we've always done, and what I've done my whole career, is focus on that runway, long-term viability.
I'm thinking of some of the energy companies we've heard from this week, given what's happened to crude. I mean, they're talking more about efficiency than production increases. Can you imagine an environment where that comes to your space anytime soon?
Yes, Colin. I mean, we saw it in 2015, remember? We had that big rush of M&A from 2011 to 2013, and then we had that decline in the gold price and everyone landed in a bad place, but we became more efficient as an industry. I think the oil and gas industry is leading in being able to manage the market because they invest way ahead of themselves, and I think that's a big lesson for the metals industry, the mining industry.
All right, the big question, what's going to happen to gold? I mean, this move is historic. Correct me if I'm wrong, Mike, but I think over the last 20 years now, you would have rather owned gold than the S&P, or very close to it. Can it continue? Is this a new base? Are we going to go to, 6,000, the way at least some J.P. Morgan says is a possibility?
David, the one thing that you can bet on is that the predictions are wrong. I've been in this industry for my whole career. But what's real is that gold is measuring a chaotic global economy, and it is chaotic. And when if you can address the chaos, there's still an embedded financial issue about. We've seen de-dollarization of many of the emerging market central banks, and gold has taken a new place in the world as a currency, a currency that no politician can print. And it's been reinforced because these central banks have been using their gold reserves to buy, using their dollar reserves to buy gold, and the gold price has gone up, so their balance sheets have improved. And so it's an interesting time. And I think I always say to people, try and imagine what it will take for us to get the world back to 1999. That's a long way away from where we are today.
You mean in terms of global debt?
In terms of global peace, of a global economic community, of supply chain efficiencies, every aspect of our everyday life was a lot better then than it is today. We're in a chaotic phase of the global economy.
Well, what's your view? I'm curious then, especially given what you're seeing from your end customers in terms of the impact of tariffs as well on whatever you're providing to them and they're selling.
So I think that, look, we've got to manage it. We're used to managing dynamic situations in the mining industry. You wake up every day to a crisis, and there's another few in the afternoon after that. But for me, the risk is still on the upside for gold. It's very pleasing to see copper starting to tighten and adjust, and because that'll bring some more investment into this sector.
Mark, always appreciate it.
Thank you.
Thank you for being here.